Well, good evening, traders. This is the FX Big Dog, and welcome to the Market Weekly Update. If you have any questions regarding this review, please email me at analysis@infinitumfx.com. Or if you prefer, you can go do a private chat, a one-on-one private chat. Just go to our website, click onto online support, and you can do a private chat through that support link. Important disclaimer, traders. Trading the forex markets is risky and only intended for investors that understand and can afford the risk. Note that the video presentation is for educational purposes only and offer no trade recommendations. If you choose to follow a trade presented in the video, it will be done at your own risk, and we take no accountability for that. We are in agreement that all traders have a full understanding of the risk and are responsible traders. Do not trade live accounts unless you have traded a successful strategy on a demo account for a period of time. Alright, traders, without further ado, let's go ahead and take a look at the currencies. As you can see right now, we do have the 240 GDP. We do see the market showing down intermediate swings. The market did pull back up to 618 pounds as it formed a low here at 58.31. Market pulled back up and then was heading down towards the objection point, but not even got to the B low right here, and then started pulling back up again. So right now, if you're one of those traders that have purchased the iPhone application that is available in the App Store, you'll see the commentary in there is based on the 240 time frame, and this is just the information that is being posted based on the commentary in the on the iPhone app. Excuse me. Alright, so you can see that the market has now started pulling back. We're still in retracement. Although we're in a down AB swing, we're still in the retracement of this down AB swing. The market was trying to pull down to take out the low, and of course if it took out the low, we'll be heading all the way down here to the objection point, which is the 1618 of this fib level. But until that B low gets taken out, we're still in retracement. Of course, traders will see that this is the 240 time frame, so we're probably bullish, a lot bullish on the smaller time frames. Perhaps you're picking up a small upswing going up on the 60 or 15 minute time frame that you can perhaps trade bullish. Now remember, we're still bearish overall on the higher time frames, but if you're looking for some bullish movements, preferably on the lower time frames, you'll be able to pick up some trades on that. Let's move to the Australian dollar 240 time frame. You can see that we're in a bullish upswing. The market pulled back less than a 382 bounce, and normally if we get a less than a 382 bounce, the market normally takes off, tries to take out the B high, which it has done right now, and then could possibly start pulling back again and closing out with some bearish candle formation. Now if you get a bearish candle formation forming here at the B high, and remember this is also coming off this consolidation right here. This is the top of the consolidation, 93.22. It will be seen much better on the larger time frame. The market, if it closed out with bearish candle formation, we could be heading down deeper and possibly trying to chase after the 382 bounce. We'll have to keep an eye on this as the days start moving on. We do have the non-farm payroll that came out on Friday, and based on Friday's movement, you can see that there is certainly a lot of dollar weakness. Now the New Zealand dollar would say something a little bit different, and I'll go to the New Zealand dollar right now. As you can see, the New Zealand dollar, as I open it up, has also shown a bullish up AB boundary. The market has shown quite bullish in, well, once again, sorry, my apologies, we have, of course, a weaker dollar again. Now the market's come back and retested the backside of this trend line. As you can see, there it is there. Not only is the backside of the trend line, its old resistance become support as well. Came well short of the 382 bounce, but that we can understand because of the movement that found support off the high and the backside of the trend line. I like to call that the goodbye kiss. We had double bottoms right there. The market started to take off and started to head for the objection point, which is all the way up here, and that is at 77.10. Do remember, we try and take profit before we get to the objection point, because a lot of times markets might stall just before it gets to those objection points. Moving on to the Canadian. The Canadian is in a down AB boundary. We can see there it is there, down AB boundary. Although the market has consolidated, it was in retracement. It consolidated inside the retracement period and now starting to extend itself to the objection point. You can see that the market has broken through the support area of that consolidation, and we're starting to head all the way down to 97.18. Do you remember we need to take out 205, which is 1.0205? This is the below of that intermediate swing. We need to take that out before we can get to the objection point. The market could possibly come back and retest 414. If it does so, it doesn't necessarily mean that we're heading back up north. It just means that it's just another retest of the support area that it broke through in the last couple of days. Traders obviously finding good bearish signals coming off the lower time frames, and that you can certainly trade and make some money off those swings. Now, once again, we are bullish on the Swiss franc. Now, this is pretty much like we've seen on the euro as well as the euro as well as the Great British Pound. Although it is in opposite directions, we're starting to see the retracement. We are still in retracement. The market is bullish, but it is in retracement. It has already found the 618 bounce of that swing, and you can see that was a support area that was a previous resistance area, and it's broken through that. Let's wait and see what happens with this candle from a candle right here. Perhaps we're still going to get some movement off this candle and maybe a bit of a bullish pullback. Well, we'll have to wait and see. Those short-term traders, of course, you'll be bearish right now because it's still in a bearish retracement on this upper swing of the intermediate swing. So you'll be on the short-term side. You definitely be still bearish, okay? Until we start getting confirmation that the bulls are taking control of the higher time frame, meaning that the retracement has been stopped, support's been found, and then of course you can start changing the direction of that particular swing. So right now, short-term traders are still bearish. Let's go to the JPY. JPY, you can see that the market took out a high. Here it is, there's a compressor chart. Took out a high right there. Took out that high, and we started a new bullish up intermediate swing. With the new bullish up intermediate swing, we can see that these 382 bounce right here. It converges with this high at this point right here. So we could expect a pullback maybe as deep as 90.34. It is the 382 bounce. Those short-term traders, they're probably bullish, looking for the dips and to buying on the dips. But watch out, if it takes out this low at 91.26, we're probably going to get down a little bit deeper, and we're going to find new support at 90.34. So for those scalpers out there, perhaps you're scalping this bearish move. Perhaps you're a short-term trader, a day trader, and you're looking for an up move, an up bullish move in the upswing. That is fine, but remember, keep your eye on 90. There it is, 91.31. If that is taken out, we're certainly going to be heading down towards at least the 382, which is at 90.34. Alright traders, that pretty much wraps it up for the weekly market update. We'll certainly see you next week Sunday, same time. This is the FX Big Dog wishing you peace, joy, and successful trading. Thank you traders.